Welcome back, everybody. I'm Yusuf Gameldine. I hope you've had a little bit of lunch. Maybe you didn't. I didn't get a chance to have lunch. There's so much going on, so much to do. We have an important panel to get to now, which is investing for FY2072. I don't know who came up with 2072, but we'll kind of use that as a headline, and then we can break that down a little bit further. I'd like to introduce my distinguished panelists. Abdulrahman Al-Fageeh, the acting CEO of SABIC. We've got Karim, Awad, the group CEO and chairman of the executive committee and the member of the board at EFG Hermes. Jennifer Johnson, president and CEO at Franklin Templeton. Daniel Loeb, the founder, CEO and CIO at Third Point. Philippe Oddo, the general partner at Oddo BHF. And John Studzinski, the vice chair at PIMCO. All institutions in their own right. So let me start off with a bit of a local tone through SABIC. And what I'm going to do is I'm going to get everybody to weigh in, because this is a conversation about short-term versus long-term. So I just want to get a sense from everybody here on the panel about where you stand in the debate of quarterly capitalism and how much you're driven by expectations quarter to quarter. So maybe if we could get 30 seconds or 45 seconds from each of you, and then we'll go to longer answers after that. So let's start with you.
Sure. Thank you, Jamal. Thank you for the opportunity, and thank you for FII to be among distinguished panelists here to talk about 50 years from today. But to answer your questions, I mean, the quarterly capitalism is something that is really important for the shareholders to see how is the realization of their capital that they have invested in. And I think this is something that has been proved that it has helped the company for their value creation, and definitely that will continue forever. But going back to the long term that you were talking about, the 50 years from today, I think this is something that we need to talk about, but this is my 30 seconds.
Exactly. We'll get to that in a moment. Dan, can I get you to weigh in on this as well?
Sure. Well, thank you also for having me here. Great to be on this panel with some old friends and new friends. So I have two businesses. We have a $12 billion hedge fund, and we've got just under, well, close to $2 billion in venture capital and later stage private investments as well. So obviously, the time frame for both of those is very different. But as on the hedge fund side, as someone who's sometimes an activist investor, I think it's important that we take an approach where we look at both the short term and the long term. And too often companies will hide behind underperformance, saying, well, it's just a bad quarter or a bad year, when they're really just not performing well. So I think it's important to have that perspective. On the other hand, it's important that companies communicate and that shareholders support programs that involve many-year and sometimes many-decade investments. So I don't think it's an either-or. I think both are important. And like any business operation, the long term is made up of shorter-term increments.
I mean, McKinsey would argue there's a lot to speak for the long term. More economic growth, more value for shareholders, more jobs. I know there's the counter side to their argument. Jennifer, how do you see it?
No, I mean, I think one of the reasons we're seeing less and less companies go public is because there is more and more pressure on this kind of short-term view. And I agree with Dan, you have to be able to deliver both. But at Franklin Templeton, I'm third generation. My grandfather started it. We still have significant ownership in the stock. And so as CEO, I've committed a third of my time to be looking at disruption, because I have to think in terms of generations. And I think now with all the technological innovation that's happening, that if a CEO is so pressured for the quarterly earnings and can't spend the time, they're going to have a hard time being a winner over the next 10 years.
John?
I think in the future, we'll look back on this period, this interregnum. The pendulum has swung very much from 10 years where the fixed income markets were de facto nationalized to this whole period of 2 or 3 black swans with COVID, Ukraine, and the sort of funny Prime Minister Kabuki in the UK, to a period now where people are focused on short term has a role, but the role of resilience in terms of technology, energy security, food security, climate. So resilience is going to play a much bigger role, I think, which plays to your question about the long term. So we're at a point where the pendulum is now swung and it's now going to start to swing back.
Karim?
I think I have to admit that quarterly results do play an important role. If you're a publicly listed company, it's almost impossible unless you have a very, very patient shareholder base who are willing to give you a huge leeway in terms of your ability to deliver results on the long term. I think quarterly results play an important role. But as every one of my distinguished panelists said, it's also important to look at the long term and try to explain to your shareholders and your board why you're building what you're building today for the long term. But quarterly results will always play a role.
Philippe?
Yes, maybe I would like to add two things. First of all, thank you. I think it's a privilege to be here at FII, and I would like to thank you, His Excellency Yasser Al-Rumayyan, because I have seen so many high-quality people who have many responsibilities with such a good atmosphere. And quality of relationship helps a lot to make the right decisions. And in the right time now, with the war and so on, it's a privilege to be here. So thank you, number one. And number two, long-term rings a bell for me. I represent the number 5th generation in the business. And I've run this company for more than 35 years. I don't know if it is good, but at least long-term rings a bell. And I definitely think that if you have time, you can do great things.
All right, so with that in mind, I think it's good to define the long term, because 2072, I doubt any of our panelists have ideas for 2072, let alone 2060 or 2050. But Jennifer, if I could go back to you and kind of see what your take is on the long term and how you construct a strategy that caters to that.
Oh, sorry.
Yes.
Well,
Knock, knock.
for the business, I was trying to think the question of where would you invest the next 50 years? And to me, the only thing you can look at is what are the big themes that are going to be a factor. And so I would say that I look at medicine. I think even in 20 years, we're going to look at what's happening today with medicine and think of it as almost like the dark ages, because mapping the genome, AI, the technology to review the brain, it's really significant. And so I think that's going to be an area of focus. And stem cells on anti-aging. So now you look at that and you say, okay, people are going to live longer, populations are still going to grow, there's going to be massive drain on resources. And so you think about precision farming, where you're going to be able to produce food with less water, less resources. I think that becomes an important area that we're going to focus on. And I think space. I think, these are all things, and actually, I think that things like what's happening in NEOM with renewable energy, that's another important resource. You're going to be talking about scaling the innovation that's been created, and those are going to be the investment opportunities.
Dan, I see you nodding in agreement.
I'm sorry, it's hard to hear.
You were nodding in agreement there. Yeah.
Yeah, well, I was just thinking about, we could any one of us could fill this whole panel with time of things that we're thinking about that are very long term. I'm just going to talk about one that we've invested in on our venture side. I just want to say a couple things. So if you think about the idea that the Wright brothers flew Kitty Hawk in 1903, and just 66 years later, we landed a man on the moon. And if you had asked the Wright brothers if they thought that was possible, they'd think you were insane. The speed of innovation has increased by about 100x since then, and it's continuing to accelerate. I remember hearing Eric Schmidt say that in Davos in 2012, and the same holds true today about the accelerating rate of innovation. And over the last decade, we've had a few things that have really facilitated this expansion: the cloud, iPhone, artificial intelligence. If you really want to blow your minds and think about the next 100x increase in innovation, start looking into quantum computing and look at the impact that that's going to have on everything from medicine and medical research to materials science to cryptography and on and on. Quantum computing, which we're really right now in the process of building the capacity to have quantum computers that can run at 1 million qubits and should have one in the next decade, will set the stage for that next 40 years that will really be incredible And again, I'll be mindful of time, let your imaginations run, but really it's going to affect every single silo of innovation that you can possibly imagine.
Yep.
And I'll just put in a plug for two companies that we've invested in. If you want to go on their website, I mean, PsiQuantum is probably furthest along. There's a company called Atom, and Eric Schmidt and Jack Hittery spun out of Google with a company called Sandbox that's also doing more of software to service that area. These are all areas you might look into.
Karim, let me get a bit of a regional view. You've been managing assets for a very long time. I mean, EFG Hermes is an institution in this part of the world and beyond as well. Run me through what sort of the longer term view is as far as you can see at the moment, where that horizon is.
I think for me, the horizon realistically in a world, because of all the changes that they have also talked about and how the world is changing on a day-to-day basis, I think your horizon realistically can be probably within the 7 to 10-year period on the long term. And I think when it comes to our businesses, we try to be as much as possible patient in their development. Again, we're a publicly listed company, and therefore there is always that sort of pressure on what's happening with the share price, what is happening on profitability, and so on. But we also try to build for the future. We launched, for example, in 2018, Egypt's first buy now, pay later product. At that point of time, the market, as well as some of our board members, were actually quite skeptical about our ability to build it over the long term. And these types of businesses are definitely loss-making at the beginning. So you need to have the patience, the support to build them on. And today, it is the largest BNPL player in Egypt. And we try to always take that view on products on the long term, while making sure that our core business and what we can control today is operating to the best of our abilities so that it can balance the other businesses as well.
John, what's the thinking at PIMCO? What are the meetings like about the very long term, I assume? Probably 2072 doesn't factor in day to day, but what does?
Well, we have a fairly disciplined approach. We have cyclical forums 3 times a year, and then once a year we have a secular forum where we actually look at the world with secular trends over a period of 5 or 10 years. And of course, it's an interesting exercise because you have to get your colleagues and these very smart investors, these very smart research analysts, to stop thinking about the next 3 to 12 months and to think about the next 5 to 10 years. So what we've learned in that is to take a very broad view about the whole brown to green transition. In our research department, we look at every company by every industry, by every region, on what percentage of their earnings are coming from brown today and green, and how that moves year by year over the next 10 to 15 years. We've done the same thing in pharmaceuticals. We've done the same thing across all industries. And what you see, you have to look at investing for the long term on a secular basis. So structural changes in society. What's interesting about Jenny's comment about medicine, what did we learn during the pandemic? We learned that globally we could develop a vaccine within 12 to 15 months that had never been done before. The normal time prior to that was 5 years. We now are looking at that same mRNA technology, which will be applied to cancer and a whole range of other illnesses. So I think looking systematically at secular trends, which includes data, communications, it's actually not difficult. You have to look at it secular by region and secular by industry. And if you do that, and you have that discipline, it starts to open up your perspective much more broadly.
Philippe, what about on your end of things? 60,000 clients at your firm. What are some of the longer term themes that you've been trying to push, which again, given some of the short-term mentality that some investors have, or middle-term mentality, if you want to put it that way. What's your conviction view about the future?
The future, I would like to begin to speak about humanity. I mean, that's one of the topics of AI. Humanity, in 2072, we are going to be 10 billion inhabitants in the Earth. Today, 15% of them are in Africa. In 2072, in Africa, we will have 40% of the population. What I'm saying is humanity in 50 years means Africa. So I think all of us have to think, what are we going to do with Africa, which kind of amount of money and attention we want to have on Africa, and mainly sub-Saharan Africa. And I think it's going to play a big role because with the climate change, we know population are going to move. The migrations are going to play a key role. And I think that's a small idea I would like to share with all of you. What are we going to do in Africa? The second topic is, during the last 50 years, you have had the Moore curve, the speed of calculation, number one. Number two, now we have the capacity to store data, which is increasing a lot. So innovation is not at the beginning, it's not at the end, it's a beginning. And we have a third factor that we have to take into account, is climate change. It's going to change the way we're going to move, we're going to eat, and it's going to have an impact everywhere. What does that mean? Innovation. What does that mean? Transformation. What does that mean? Venture. Venture will play a key role in asset class, which doesn't play a key role today. Yeah. And it's maybe something I would like to suggest to have in mind for all the investors in the world to begin to invest much more in the future in venture.
Yeah.
And maybe, if I may, the third point. Third point is long-term shareholders. Long-term shareholders have always played a key role in the US, but also in Europe, and mainly in Germany. We know very well Germany, the Mittelstand, family-owned business, and I'm convinced that in Saudi Arabia, there are many, many family-owned companies. If they accept to become a modern family business, they will play a key role.
We'll get back to some of your other ideas in a moment. I just want to turn to the local story here, which is Saudi Basic Industries. Yeah. You've taken over as CEO recently, acting CEO. Yeah. Of course, you've been with the company for many, many years. SABIC at the forefront of R&D, so in many ways, you would like a lot of your thinking to be long-term. Just share some of your insights on that.
Sure. Okay. Probably I'm the only one that come from manufacturing and here in this panelist, so I'm going to give you my perspective and the long-term investments from manufacturing perspectives. For many years, for almost 5 decades, the investment long-term that we are investing in is something related to the machine and equipments, of course, definitely along with the innovation and sustainability. And the last and the third pillar that we do also in the skilled people and talent that manage and lead these investments. And normally the investment that we do that we call long-term, which is take about 20 years, 3 cycles in the economics take about 20 years, and this is the long term. And definitely that investment can be also realized after that 20 years. But I do want to make it easy on myself for the 2072, because this is, not an easy to predict, frankly speaking, because the technology is playing a major part in this. And if we learn from the history, if I go back 50 years, in 1972, nobody would imagine that the internet is going to play a major role in the way of life and also in the investment decision-making. Technology could be completely different in 50 years from today. But what is going to stay? From my perspective, I think that 3 pillars for investment is going to continue and will be realized in the 2072. First, from us as a global company in petrochemical production, I think we are going to be there. You will see us in 2072. SABIC will be
if there. I'm around 2072.
Yeah, SABIC will be there, and some of, maybe most of our audience here is going to see SABIC in 2072 for sure. And the core business that we are investing in, that we need to have a diversification for the resources that we are going to do, including the feedstock. So we are going to focus on the conversion of the oil into chemicals, and I think this is something that we are starting to do it, and it will take long term until 50 years from today. The second thing is the sustainability. sustainability by all measures and all ESGs, including the environment. And I'll give some example, and I have read in some of the UN data and statistics that in order to have less than 1.5 degrees C in the climate change, we need to remove at least 28 gigaton of CO2. In addition to what also will produce in the future. What this will take at least $4 trillion of investment, $4 trillion of investment in every year. And that's $4 trillion is by itself, it is a GDP of a large country. So that investment, I think, for the sustainability, we are going to realize this and see it in the 2072. Sustainability is a must.
That's a journey we're looking forward to.
And the last one, if you allow me.
If we can, just very briefly, just the key
Very
word
briefly,
for that.
is the last one, which is the most important one.
Only the key
which
word.
Is investing in humanity.
Okay, which is the theme of the conference. I'm just mindful of time, and we just want to get through the last sort of topic that we have, subtopic, which is the shorter term. I think we're talking about 30, 40, 50 years, but what's going to happen the next year?
Yeah.
And I had this in my earlier panel as well. We have higher interest rates, we have high inflation, we have geopolitical fires everywhere. So, John, let me start with you. On 2023, I mean, it looks to me like we're driving into an economic storm.
Well, I think if you want to define the perfect storm, it's arrived. I mean, in terms of juxtaposing strong equity markets, low interest rates, low inflation, we now have high interest rates, 40-year unprecedented inflation. We describe inflation in the United States as sticky because even if you look at the US being independent in terms of oil and food, you still have core inflation higher than you'd like it to be. I think in the short term, you're looking at another series of interest rate increases. I think the thing we have to keep in mind, and this gets to this secular trend, and we haven't mentioned it too much at this conference, but that is global supply chains. I thought it was very interesting yesterday. One of the senior members of the PIF said that there was an objective to bring about 65% of local procurement through local supply chains. And one of our trends that we're very focused on is either reshoring, friendshoring, or bringing supply chains back to your own country. But this is something that's going to take 2 or 3 years. So during this period, we're probably going to cause a lot of cost structures, you see this in earnings announcements, are going to be a lot more ambivalent and ambiguous, rather, not ambivalent. They wish they weren't ambivalent. So I think you're going to see inflation. We're looking at inflation not resetting back to 2%, but we're looking at probably somewhere between 3 and 4% as being a core level of inflation, certainly for the foreseeable future, for the next couple of years, until you've got some resolution of energy, some resolution of supply chains, and some resolution of sort of some of the geopolitical tensions that exist, particularly in Europe.
Jenny?
I'm just going to add one thing to what John, I agree, and I think, our view is that this core inflation is stickier than most people think, and that the Fed will pretty aggressively raise rates. We'd say probably 75, 50, and then maybe another 50 or 225s, and then have to sit on it a while because it's a lag effect. But if you look at the consumer and the reason core inflation, the consumer still has more money in their bank account in the U.S. than they had prior to COVID. A lot of people talk about mortgages being a concern, but they're like 2008 with the interest rates going up. But the reality is in 2008, average U.S. citizens' mortgage, 40% of them were variable. Today it's like 7 and 8%, so it actually doesn't affect them much. Unemployment is still very low. And so the consumer still, and they have very little debt compared to traditionally what a U.S. consumer has. U.S. is great at, exporting inflation. So I think this sticks, longer than people expect, and that results in obviously choppy markets.
Dan? Get you to weigh in on the shorter term and sort of getting through the next year or two?
Yeah, I mean, I kind of tease out like what I think about the real economy, what I think rates and inflation are doing, and then what markets are going to do in response to that. I think the most important thing people have to remember is that equity markets bottom out when the news is really awful. I remember on March 9th, there was a headline on Reuters, it was the cover of the New York Post, Warren Buffett saying, the economy is falling off a cliff. Well, what he didn't say is that, and he didn't know, and I didn't know, was that the stock market had actually bottomed 3 days before that headline came out and went on to go from 666 to 3,500 a decade later, and up a lot, 20% over the next month. So I'm not saying that we're in that state, but I'm just saying in terms of, for those of you that are investors in equities, sometimes the best time to pull the trigger is when it's really gloomy. And you don't want to be too early, obviously, because you absorb some pain, but maybe I would say like Warren Buffett, I think the American economy is resilient and incredibly innovative and here to stay. So I'd be looking for those companies and those opportunities to get involved with. I think on rates and inflation, I actually think we may have already seen the worst of it. Now, I don't think this is contradicting what you both are saying. I think the second derivative is going to be favorable. It doesn't mean inflation is going away. It means that our peak inflation is starting to roll over. You're seeing some improvement in goods that was already in the CPI numbers. You're going to see some improvement in apartment rentals, which is a big component in the next print or two. And I think as a consequence, you've already seen this flattening off in rates.
Yeah.
And we may have, that may be there. So what I think we have to be next concerned with is, what does this mean? How long does this last? How long will how much will the Fed have to beat the economy into submission in terms of driving up unemployment? And I actually I'm perennially an optimist, but I think it's going to be less bad than people think.
Okay.
But that's my take.
Karim?
Yes, maybe I'm going to speak more about Europe.
I meant Karim first, and then
sorry,
we'll turn
Karim.
to you.
Sorry, Karim. No.
You can go ahead if you want. Look, I'll take a more micro view on this. I think for us, we see the next year as one of opportunities specifically in the GCC. So we are doubling down on our operations, our expansions here, in particular in Saudi Arabia, because we believe while the rest of the world might be in turmoil, this is a region that will continue to boom at least for the next couple or 3 years. And I would also add to that on a corporate level, the most that you can do is make sure that your capital structure is there in terms of you reduce debt as much as possible in an increasing interest rate environment. And you're always on the lookout for opportunities, because the next period will generate opportunities for consolidation, will generate opportunities for purchases of new ideas, new disruptive products for different businesses. And I think this is what you need to keep an eye on during the next period as well.
Philippe?
So about Europe, let us speak about inflation. I mean, the inflation in Europe is probably different from the US. You have three sources of inflation. And the post-COVID situation, logistic, I think it's slowing down. The price of the cost of goods and price of the cost of transportation is slowing down, which is quite important to see. Number two, the price of energy. Price of energy went up dramatically and has a huge impact on the GDP. And this impact is going to go on. And the third, about the cost of labor. So far, the cost of labor has been quite slow. And what we see, what is very interesting to see is what we see on a daily basis. For most of the company we follow, the results are skyrocketing right now. They are skyrocketing because they have been able to increase their prices. So what is going to be the impact on the results of 2023? And I would say it's going to depend a lot on, rely on the decision of the government. How are they going to be helpful for the company to reduce the cost of energy and the price of energy? So how the ECB is going to increase interest rates again and again, but we can see that the purchasing power of the people is low.
Yeah.
And we have to pay attention to that. So maybe wages are going to go on to... But what I can say is in a few words, I have the feeling to be on the beach, you know, the sun is shining, and the weather forecast is announcing a storm. How strong the storm is going to be, I don't know, but hopefully the storm is not going to be as big as we can imagine, and maybe it could be a good entry point to buy stocks.
Fingers crossed there. Just a quick local conclusion as well. SABIC, really finger on the pulse of consumers. I always have my eyes out for the SABIC earnings. You know what's going on with sort of global demand and petrochemicals with those numbers. What are you seeing for next year?
Oh, this is not an easy question. I wish that I can ask question for 2072, but yeah, the demand in the petrochemical, I think it is still healthy, even though, I mean, with the recession that we are talking about, with the pressure that we have in Europe and the energy, and also the lockdown that also we have keep continuing in China, that has impacted the demand a little bit for the petrochemical. However, that there is a core material and certain material that play a major role in the health and in the building and constructions and the automotive and major transportations. These are still there, and I think it will continue for some times. But I want to go back, if you don't mind, for the 2070.
Briefly, though, because we're a little bit out of time.
I was alluded to say about the investment in people and the talent. And I think the leaders that is going to be in 2072, they are not here today, of course. But I think the more that we invest in the people, I think we will never regret. And it is the only one that is going to transform and transfer from generation to generation to those leaders that is going to be in 2017. We have seen this in the vision of Saudi Arabia 2030. We have seen when it's announced by His Royal Highness Prince Mohammed bin Salman. I think you can see in Saudi Arabia now more than 50% of the leaders that they are young, and this is what we are required.
Positive note to end on. A warm applause, and thank you very much to our panelists. And thank you as well, a fantastic audience. Great, thank you.